Okay, we've got a whole lot of economic data, including the GDP numbers. And unfortunately, we got what the market was expecting, which is not what we were hoping for. We got a GDP of 2.4%, which means that we actually grew more than expectations. We were hoping, we got a GDP of 2.4%, which means that we were hoping to get a negative. We were hoping to get a negative GDP number to show that the economy was actually slowing, but the economy is not slowing, which is not good. The jobless claims also not looking good, and consumer spending also not looking good. This is all bad because we know that Trump's plan is actually to get the growth down and to get the markets down, and it's not working. And so now what you can see is that the markets are responding accordingly. We got the bubbles red. Let's look at the stock bubbles. The stock bubbles mainly red. We got Bitcoin back at 86,300. And then I want to spend some time actually talking about what happened yesterday, because I think yesterday was a big day for Hyperliquid. I don't know if you guys were watching what was going on just after the show yesterday, but just after the show, Hyperliquid got attacked, and the attack was very serious. In fact, so serious that it could have taken down the entire Hyperliquid vault and pretty much closed down Hyperliquid. And I think that the attack was actually organized or arranged by the centralized exchanges. And it's like a big war now between the centralized exchanges and the decentralized exchanges. So today we have lots of alpha. We're going to talk about the economic data. We're going to talk about Trump's plan. We're going to talk about exactly what's going on. I'm going to talk about Hyperliquid, all of that. If that sounds good to you, you know what to do. Subscribe to the channel. Let's get the show on the road, guys. Okay, I want to say that Wife Changing Money, Glenn Goldberg, David Cleary, 𝗠🔫🔫, you guys are the real legends. You guys are going to really make it. You know why you're going to make it? Because when the times are tough, you guys are here every single day. Mumo Evans is here. Diego Salgado. We know Diego. All of you are here every single day in the bull market and in the bear market. And this is when millionaires are made. People who pay attention now, these are the guys that are going to land up making money. Mark my words, I've been here for 3 cycles, and I can tell you that the only people that land up making money are the people that are here multi-cycle through the good times and through the bad times. So if you're here, congratulations. Obliterate the like button. Got lots of alpha to talk about today. I'm not going to waste any time. I'm going to take you straight through to see what happened yesterday, right? So what actually happened yesterday? Remember, we spoke about the NASDAQ, and we spoke about the fact that the NASDAQ was about to go back above the 200-day moving average, right? That was like a key point, and the NASDAQ had just closed above the 200-day moving average. And then exactly what I said would happen. I said to you, Trump cannot afford the markets to continue to run. And so what he did was he came out with a tariff announcement and pretty much crashed the markets. In fact, there were 2 tariff announcements that came out, right? The first one was a much more general tariff announcement. It was like, what about reciprocal tariffs? And that's, I guess, kind of fair. Trump was like saying, look, if you impose tariffs on us, we're going to impose tariffs on you. It's pretty much that simple, right? This was the first announcement, right? And as I said, there's no way that Trump would let the markets run. He simply cannot afford to do that, right? So this was the first announcement.
Will those be immediately effective April 2nd on all countries, or will you focus on the worst offenders?
No, we're going to make it all countries, and we're going to make it very lenient. I think people are going to be very surprised. It'll be, in many cases, less than the tariff that they've been charging us for decades.
So he's talking about reciprocal tariffs. Any country that imposes tariffs on the U.S. will now get tariffs imposed by the U.S., right? So reciprocal tariffs, I kind of live with that. I mean, maybe Trump's trying to even the playing field. I think that's pretty cool. But the knockout blow, or the one that actually took the markets down, was this announcement over here. This was a tariff announcement specifically around the auto industry, which, as you know, makes up a huge part of the US GDP, right? The US is a massive car manufacturer. It is the biggest car seller in the world. The most car sales in the world actually happen through the United States. And this is what happened yesterday.
And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%. And basically, as you know, and as you've been seeing, not reporting as accurately as it should be reported because it's a massive story.
Sure.
Business is coming back to the United States so that they don't have to pay tariffs, and I think.
So basically what he did was he imposed a 25% tariff on any cars that are imported into the United States. So he went from 2.5% to 25%. Now, what does it actually do? Well, effectively what that does is it makes cars in the United States more expensive, right? And if you look at the cars that are actually made in the United States, so these are the cars that are actually made in the United States. Tesla is 100% made in the United States. Ford is 77% made in the United States. And then you go to all the other ones, Stellantis, Nissan, GM, and you can see which cars are made in the United States. So what that means is that if you're buying a Tesla, chances are it won't go up very much. If you're buying a Ford, it will go up a little bit. But if you're buying any of the other cars, the price of the cars is actually going to go up quite a lot, right? Which is quite bad, right? And then you ask yourself, okay, but where are these cars actually coming from? So the majority of the cars are actually made in Mexico. And the reason why they're made in Mexico is because Mexican labor is a lot cheaper than US labor, right? So what car companies do is they used to set up a plant in Mexico, get their employees in Mexico where the prices per employee are much cheaper than American employees, and then basically manufacture the cars and get them over the border, right? Now, Trump has basically imposed this 25% tariff, which is quite big. Second company it will suffer is Japan. So all the Japanese cars, Nissan and a whole lot of other Japanese cars, well, they get imported into the United States, and now they're going to get a 25% tariff. It's quite a big blow, right? This is quite a big number. And you can see that Tesla is the one that suffers the least, right? Even though they are 100% made in the United States. Elon came out and said, look, they are 100% made in the United States, but the parts that are imported, a lot of the parts are actually imported. And that means that the price of Teslas is also going to land up going up. So why did the market not like this? Well, the market didn't like it because effectively what you're doing is you're taking an economy where car owners and car drivers are basically already falling behind on their car payments. As you can see, we're at the highest level of car default repayments. And now what you're doing is you're raising the prices of cars. So what is that going to do? Well, number one, it's going to slow the number of cars that are sold, right? But also it's going to add inflation, because the problem is that if cars, which make up one of the metrics around inflation, or one of the measurements that we measure in inflation, if the price of cars goes up, then we're going to have persistent inflation. And if we have persistent inflation, there's no way that the Fed can reduce interest rates. And remember that our thesis is that we want Trump, or we think that Trump wants to reduce interest rates. But by putting on these tariffs, effectively what Trump is doing is he's raising the price of cars, he's raising the inflation rate, and he's lowering the chance that we're actually going to get these rate cuts that we're on about. And so this is what the market's worried about. And this is why we had the rejection of the S&P 500 off the 200-day moving average. You can see it over here. And we had the same thing on the NASDAQ. The NASDAQ also rejected. This is like a perfect breakdown retest. Now, theoretically, this could continue to go down because it's a breakdown retest and then continues to go down. And that is, I think, exactly what Trump wants, right? Like, Trump has come out and said, look, I don't care about markets. And by saying that, he's kind of saying, look, I'm not looking at the markets. I'm doing what I think is right for my plan. And his plan is to get manufacturing back to the United States, to create jobs and investment in the United States, to create money coming into the United States, and of course, to slow down the markets, right? And that's exactly what's happening. That's Trump's master plan. And so yesterday when he was asked about, well, are you watching the markets? This is pretty much what Trump came out and said.
And on these auto tariffs, we saw obviously the NASDAQ 100 go down 2% at close, S&P 500 down 1%. What are you concerned about that market reaction?
Today?
Yes, sir.
𝗪𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏
days or 1 week.
And on these auto tariffs.
So, okay, guys. So wait, I just got an announcement right now, which I think we need to talk about this. We will come back to this story, but we did get an announcement now. The announcement says that Binance is about to list the 𝗔𝗥𝗚 off the grid token. This is very, very, very good for gaming. We thought it would come. We told you about this a few days ago that we thought that this announcement would come. So on the Binance is excited to announce that the 66 projects in the Binance launch pool will be available for. Okay, there's a launch pool, and the launch pool is happening now. So the 𝗔𝗥𝗚 is happening. So I would look at the gaming tokens. Let's quickly look at some of the gaming tokens. You should get a pump. You should get some kind of pump in the gaming tokens. Watch the gaming tokens. Anyway, let's go back to the story here. So Trump has a master plan. Trump's master plan is get the markets down. That's the only way that he's going to convince Jerome Powell to lower interest rates. And I must say, I was watching this interview, this thing. I mean, you got to love this president, right? I don't know if any of you watch this, but I think this is the funniest thing I've ever heard in my life.
You know, I haven't seen a mask in so long. You're wearing a mask. So nice of you. I haven't seen anybody wearing a mask in a long time. It's good. You feel more comfortable, right? Good. That's good. You know, I haven't seen a mask.
Completely mocking the whole mask mandate. And I mean, you probably have this like left wing reporter there wearing a mask, still worried about COVID. And, you know, Trump like in the middle of the press thinks, oh, you're so kind of you for wearing a mask. Anyway, so I tweeted this yesterday and I'm reiterating it again. I love making shows when the market's pumping, and I love making shows because I'm naturally optimistic, as you can tell. And I like making shows that are naturally bullish, right? Like I love making shows that say this is going to pump and that's going to pump and this is going to pump. That's me. That's who I am as an individual. But I'm also realistic because I've been here for multi-cycles. And the answer is, or the big rule is, never bet against the Fed. And in this case, the Fed is telling you that they're not going to start loosening. And so right now, as much as I want to say that, hey, the markets are going to pump very soon, I don't see these markets pumping until at least May. But I mean, I hate to say it, it could even be as late as August or September. Because we had the GDP numbers that came out now. And the GDP numbers, the economy is still growing. And for as long as the economy is still growing, we have a problem. If the economy is still growing at these paces, now, I don't know who does the forecasting at the Atlanta Fed. Josh, was this you, bro? These guys were forecasting a negative 1.8%. Bro, it's a positive 2.4% that we got for the inflation readings. I don't know who does their forecasting, but whoever does, that person should be absolutely fired, right? So the thing is, the thing with this, it shows that the economy is still growing. And if the economy is still growing, we still have to have negative growth in order for Powell to start reducing the interest rates. We're not even anywhere near negative growth. We were hoping to get a negative GDP reading, so we could have a negative GDP reading now, another negative GDP reading in May, and then we could turn around and we could say, oh, hold on a second, guys, it's a recession. Wow, Powell, you gotta loosen the markets. But it's not happening. The markets are still growing. And for as long as the markets are still growing, Powell has no reason to reduce the interest rates. And so Trump has got to keep trying harder and harder and harder. And so I hate to say it, and I've said it a million times. And you know me, if you've been watching me for years and years, you know I'm like the biggest bull in the whole world. I'm the most optimistic person in the whole world. But I'm telling you now, I don't see these markets moving until May. And I even hate to say it, but imagine we have to wait for the markets to move until August or September. Because, you know, generally they say sell in May and go away. Imagine we get another sell in May and go away. And then that takes us to August or September. So that is where we are with Trump. He does have the master plan. The tokens or the stocks that are going to suffer the most, the Magnificent Seven, right? Because they were the ones that went up the most last year. And so, like, if you look at this, it says the seven giants, which contributed 30.6% weighting in the S&P 500 over 24, contributed most of the returns in the markets last year. The S&P 500 index had a total return of 25% in 2024, with the Magnificent Seven accounting for 53.7% of the returns, which means the stocks that are going to get the biggest hit while this carnage is happening are going to be the Mag 7. By the way, let's just actually have a look at how the markets opened today. Would you imagine the stock markets have opened down? Okay, slightly down. We can look at the stocks bubbles. Pretty much, I see most of them down. AMD down 4.11%. I actually bought some AMD. Great chart. I'll show you the chart, actually. Let me just go to the AMD chart. I bought this chart. I bought this because I just feel like just look at that. Oh, you can actually see I've been messing around on this chart. There's the breakout. There's the retest. Probably going to go up now. By the way, if you want to trade stocks, I've started trading a lot of stocks. I'm actually going to do a channel in front runners of all the stocks that I've been buying. I bought Robinhood. I bought Tesla. I bought Coinbase. I bought MicroStrategy. I bought AMD. You can actually do it using USDT and USDC. You can actually just go to this markets.com. There's a link below. To markets.com. And literally you can deposit. So if you press add funds, so you press add funds, and then it actually gives you a USDT or USDC deposit address, and you can deposit money, and you can use that money. You can onboard with your crypto on and off, and then you can buy and sell stocks, because right now there's a lot of money to actually be made in the stocks. So I've actually been doing that. That's what I've been doing. So as I said here, I did actually buy AMD, and I bought a whole lot of others. Yeah, so that is effectively Trump's plan. And again, I wish I love broadcasting to big numbers, and I love having everybody here, and I love the shows where we get like 100,000 plus views per show. But those are the bullish shows that are actually happening. And right now, to be honest, don't see it. So just hang in there, because this is where you pick up the bargains. And the people that are here now are the ones that are going to land up making money, because you have the consistency, and you have the endurance to carry on buying and to carry on being interested. And if you're buying and you're being interested, you're getting all the alpha that all the other guys are pretty much missing out on. And when they come back, you will already be 100% up on your money, etc. All right, let's talk about something else. I want to talk about Hyperliquid. Holy shit, I don't know if you guys watched what happened yesterday. Whoa. I thought at one stage this could be the end of Hyperliquid. I'm going to go through exactly what happened. You can see this candle down is exactly when it happened. Let me show it to you on the 1 hour. It looks a lot more scary on the 1 hour. So that's what happened. So it was trading at around 16.27. It was doing very, very well, right? And then all of a sudden, something happened, and it went all the way down to $12.41. Now, I want to explain to you what happened, because I think it's super important that you understand what happened. Because this exploit, it was an exploit. This exploit could have taken down Hyperliquid completely. And I'm going to explain to you why. It's a very, very, very simple exploit. But it could have taken down the entire Hyperliquid business. Imagine that. It would have wiped out. Let's just have a look here. Josh, why didn't you tell me I had like a rogue hair here, bro? Like one hair. So it would have taken out $14 billion of fully diluted valuation here, right? So let me explain to you what happened, because I think it's super important that you understand what happened. So what is Hyperliquid? You all know what Hyperliquid is. It's a perpetuals DEX, okay? It is like Bybit or Binance or all those other ones, but it's for perps. Let me actually take you to Hyperliquid, so that those of you who've never traded on Hyperliquid can actually have a look at it. There it is. Okay. Basically, it's a decentralized perps DEX. It means that you never deposit your money onto the DEX, and you can trade perpetuals. So you can trade perps like a normal exchange, right? You can trade them with leverage, right? That's what Hyperliquid actually is. Now, what actually happened yesterday? Well, at first, it started like a normal day, right? There was a token. The token is called 𝗁𝗁𝗁, right? And what happened was there was a trader that took a 6 million perpetuals short on 𝗁𝗁𝗁. So spot long plus 6 million perpetuals short on 𝗁𝗁𝗁. Now let's understand the complexity of this trade. Okay, what was this person trying to do? He bought $6 million worth of 𝗁𝗁𝗁, and he sold he went short for $6 million on perps. Now he is effectively delta neutral. So the spot goes up, the short goes down, etc., and the other way around. Okay, now the problem with being short is that there's no cap to the amount of pain that you land up taking. When you're long, you know the bottom of the worst that you can go to is the share can go to, or the token can go to zero. When you're short, it's different, because when you're short, the share price, the token price can go up and up and up and up and up and up and up until eventually you just get liquidated. It's the worst thing being short. Like, at least with long, you know what the bottom is. With shorts can go forever and ever and ever and ever. And this is exactly what this exploiter did. He took a short position on the perps, and he forced himself to actually get liquidated. In other words, he had a short and he had a liquidation price in his account, and he forced himself to actually get liquidated. Now, why did he force himself to actually get liquidated? Because what all perpetuals exchanges have is they have what they call a liquidation engine. And what this liquidation engine does, it says, if you're getting liquidated, they take over your position and they close the position in time, or they hold the position. It's up to them, right? This is what the perps dexes actually land up doing, right? So on Bybit, if your account gets liquidated, basically what happens is there's a market maker in Bybit which lands up buying the liquidation price, liquidating you, buying the liquidation price, and then holding that position or trading out of that position, right? All the exchanges have this. Hyperliquid also has it. So what this guy did was he took a position, a 6 million position on 𝗁𝗁𝗁𝗁, and then what he did was he actually started pumping the price of 𝗁𝗁𝗁, and you can see it over here. And so at some point here, he got liquidated, and that position was actually transferred to Hyperliquid who now were holding this short. Now, the problem is that this token had such a low market cap. It had a $20 million market cap. And he took up 6 million short position, which means that as the token went up in price, the position started losing and losing and losing more money. Okay, so just imagine you're in a short position, you get liquidated, you pass the liquidation on to somebody else, which is this Hyperliquid engine, and now the Hyperliquid engine is holding the short position, while at the same time, the token starts pumping and pumping and pumping. And the problem is that the liquidity is so small because the token is so small that they actually couldn't trade out of it, right? So the goal, make Hyperliquid inherit a toxic position. What happened next was absolute madness, right? Once the trader's account got liquidated and the position was given to the Hyperliquid engine, that is when the token absolutely started to pump. It pumped 429% in an hour. And what happened was Hyperliquid started to lose more and more and more money. At one point, they were $12 million down. Now, what's the problem with this? The problem with this is that if you look at the Hyperliquid reserves, Hyperliquid only have about $200 million in their reserves, which theoretically means that if this short position went up and up and up and up and up, eventually they could have liquidated the entire Hyperliquid vault and effectively render the entire decentralized exchange insolvent. Nuclear scenario, if Jelly hit 0.15374, Hyperliquid's entire $230 million vault would be completely wiped out. And so now you're realizing that this was a highly sophisticated, highly coordinated attack. This was someone who really wanted to take down Hyperliquid, and they financially engineered a solution, and the solution was go short on an illiquid token, pump the token, get liquidated, and then carry on pumping the token so that Hyperliquid couldn't cash out of this, and at the same time, make them lose and lose and lose and lose money. Okay, here's where it gets really, really interesting. As soon as this happens, as soon as the price of Jelly starts pumping like this, two announcements come out. The first one is from Binance, who miraculously, never seen anything like this before, had decided to list Jelly perpetuals immediately with 25x leverage. And OKX, at the same time, also decided to list Jelly. So just imagine this. Hyperliquid is going through a potentially cataclysmic, catastrophic scenario. And instead of helping them, this is a financially engineered hack. Instead of actually helping Hyperliquid trade out of this, what do the centralized exchanges do? They make it worse because they listed perpetuals. And we know that when a token lists on Binance or when a token lists on OKX, the token price pumped. And that's exactly what happened. Now remember, the token price pumped to about 0.05, which means that if we went another 2x from here, the entire Hyperliquid DEX, perpetuals DEX, would have been rendered completely insolvent and completely unusable. This could have been a catastrophic attack. So, what did Hyperliquid do? They published a statement that says, after evidence of suspicious market activity, the validator set convened and voted to delist Jelly perps. All users, apart from the flagged addresses who will be made whole from the Hyper Foundation, this will be done automatically in a number of days. There's no need to send a message. As with all other chains, validators often need to convene to take decisive action as a group to ensure that the integrity of the network is a priority. Note that Hyperliquid, so basically what happened here was, the validators got together, and obviously there's very few validators, and they decided to, number one, delist Jelly futures. And what they did was they changed the price on the exchange by adjusting the oracle, and they reversed the position. And instead of being $12 million down, they actually ended up making a $700,000 profit. Okay, so let's analyze the whole situation. So I think you understand what happened. Now let's analyze the whole situation. The first thing is, well, congratulations to Hyperliquid for, well, firstly, this shouldn't have happened. And I believe that Hyperliquid learned a very good lesson in terms of the position sizes and the leverage that they can allow people to take on small tokens. The second thing that we see here is that instead of helping Hyperliquid, the centralized exchanges effectively jumped in and decided to try and destroy Hyperliquid. It was crazy. I was watching this. It was crazy. to make matters even worse, the accounts that were funded, I want to see if I've got this tweet for you from ZachXBT. The accounts that deposited into Hyperliquid were actually accounts that were funded from Binance, believe it or not. And so it begs the question whether the centralized exchanges saw this hole and decided that this was their one chance to actually destroy Hyperliquid. Now you got to ask yourself, why do they want to destroy Hyperliquid? Well, it's pretty simple. Because ever since Hyperliquid launched, this is what happened to the chart of the CEXs versus the DEXs. More people started to trade futures on DEXs ever since Hyperliquid sold. Now, who are the big losers here? It's the centralized exchanges, right? I mean, just have a look at this dashboard. The blue is the yellow is Binance, and the blue is Hyperliquid. You can see that there's only one threat to the centralized exchanges right now, and that is, of course, Hyperliquid, right? And so, to me, this was a declaration of war. For one, I wouldn't be surprised if indirectly the centralized exchanges were responsible for this. But let's give the centralized exchanges the benefit of the doubt. And let's assume that they weren't actually responsible for this. Well, instead of helping someone while they were down, for companies they're all talking about a decentralized future. And here we are with the world's first decentralized exchange that actually looks and feels like a centralized exchange. And instead of helping this exchange, what they did was they declared war. And that's exactly what I said yesterday in my tweet. I tweeted something yesterday. I said, and here we go. It would be even funnier if this outcome happened because both manipulators were freshly funded from Binance on Arbitrum. So the money to start this account that exploited was funded from Binance. So I said, look, today's reaction from OKX and Binance was appalling and a clear declaration of war between the CEXs and the DEXs. Unlike when Bybit Official was hacked, all the CEXs chimed in to help. But this time their mission was to destroy. I kind of expected more from OKX and Binance because I expected that we're all in this together and we want a decentralized future. But what you realize is that when you threaten the centralized exchange pie, that they will do anything and everything to make sure that you're actually knocked down. Now, let's talk about the wins and the losses here. Number one, Hyperliquid survived. And, with a new exchange and with a new industry, every time you get attacked and you survive, you patch up the holes and you get much stronger, and I'm sure they'll patch up the holes. Number one. Two, we've learned that the CEXs are at war with the DEXs, and it actually legitimizes the decentralized future, because if the centralized exchanges are so scared, they must see a real threat, and that's exactly what's going on now. You can actually see that there's a massive, massive, massive threat, and they actually see it. And as I say, Hyperliquid has survived. It's back. It's trading at $14. I think this is a great test, although I do think it will keep getting tested in the future, which means that if you're going to buy this token, you need to know that you're going to have a lot of heart-stopping moments. Someone says battle testing is best testing. Exactly. Battle testing. Chuck Strickland says that. So that was the whole Hyperliquid saga. Another one of our tokens, which is actually doing pretty well today, is Curve. The reason why Curve is doing pretty well, it's one of our stablecoin plays. We've been calling this one for a while. It's one of our stablecoin plays. The reason why it's doing well is because there was a stablecoin act, which the Digital Asset Subcommittee Chairman Brian Steele passed or put into play yesterday. And so all the stablecoin tokens are actually starting to run. And exactly, this is exactly our thesis. Our thesis is that this is the year of stablecoins. And again, there's not many things that you can buy to get your hands onto stablecoins. You can buy Coinbase because they've got exposure to Circle. You can buy Curve because that's the exchange that trades them. You can buy Convex because that's a derivative of Curve. Not many other things that you can buy, but it just shows that our thesis is right and that it is playing out. It is really, really, really playing out. We also know that today Walrus is launching. I don't know if you guys know anything about Walrus. Walrus is a project that is incubated and developed on Sui. I'll play you a little clip from Adani. He is the founder.
So big news. Walrus is now live in mainnet, Thursday, 27th of March. It's amazing what we've been able to achieve in such a short space of time. Less than 2 years ago, we're actually launching Sui on mainnet, and we promised the ecosystem that we are building more than just layer one. We're rebuilding the fabrics of what's going to be the internet version 3. We started off by building Sui, the global coordination layer.
Okay, so
very soon after, we launched primitives such as ZK login to make it easy for everybody to access.
Walrus is a storage layer, an on-chain storage layer. So you can think of it like Filecoin, or kind of Arweave, but more of a Filecoin, on-chain, and it's developed by the foundation, by the Sui, or backed by the Sui Foundation. There's a massive airdrop. Now, I didn't participate in the airdrop. I know a lot of the front runners actually did land up participating in the airdrop. So I mean, just have a look at it. It is quite a big thing. Otherwise, I think that's it for today. I don't know if you guys are in front runners. Just remember that today we've managed to arrange Guy Young. Every week we get a big guest to come to front runners and actually talk about what's going on in the markets. And this year we got Guy from Athena. So he never does these things. We managed to convince him to join us and actually talk to the front runners. A big Q&A today. So if you want to join, you can join front runners if the waiting list is open. Otherwise, I'll see you guys again tomorrow. Until then, don't trade, my friends.